The transition from retail to institutional participation in crypto markets requires more than capital and conviction. It requires infrastructure, custody, credit, execution, reporting, and compliance systems that allow an institution to manage digital asset exposure with the same operational rigor applied to traditional asset classes. Crypto Prime Brokerage provides this institutional infrastructure layer. Traditional prime brokers in equities and fixed income provide similar services: securities lending, margin credit, portfolio reporting, and execution access. Crypto prime brokers replicate this service stack for digital assets, with modifications required by the unique custody, settlement, and regulatory characteristics of blockchain-based assets. The emergence of regulated crypto prime brokers including Coinbase Prime, Anchorage Digital, and the digital asset divisions of several major banks represents a fundamental maturation of the institutional crypto infrastructure stack. This analysis provides the evaluation framework investment committees and COOs need to assess prime broker selection for institutional digital asset programs. Qualified custody is the regulatory and operational foundation of any institutional crypto program. Following the SEC definition of a qualified custodian under the Investment Advisors Act, institutions managing client assets in crypto must ensure digital asset holdings are maintained with a custodian meeting qualified custodian standards. Coinbase Custody, Anchorage Digital, and BitGo are the leading providers of regulated institutional custody. Margin and credit facilities allow institutions to optimize capital deployment. Instead of holding uninvested cash, institutions can use Bitcoin or Ethereum holdings as collateral for short-term borrowing to fund operations or meet margin requirements on derivatives positions. The credit terms available from crypto prime brokers require careful evaluation against institutional risk management frameworks. OTC execution and settlement integration distinguishes prime brokers from simple custodians. A prime broker provides not just safe storage but the ability to execute large trades efficiently through its OTC desk connections, settle those trades with delivery versus payment security, and reconcile all activity in a single reporting environment. The competitive landscape for institutional crypto prime brokerage has matured with clear specializations among leading providers. Coinbase Prime leads on regulatory compliance and institutional brand recognition, benefiting from its status as a publicly traded, CFTC-regulated entity. Its integration of OTC trading, custody, staking, and lending services under a single platform provides operational simplicity that many institutions value highly. Anchorage Digital occupies a unique regulatory position as the first federally chartered digital asset bank in the United States, operating under OCC oversight. This status provides institutional investors with a counterparty that meets the most rigorous fiduciary standards, including the ability to serve as a qualified custodian under the Investment Advisors Act without legal ambiguity. Traditional bank digital asset desks at Goldman Sachs, JP Morgan, and Fidelity Digital Assets provide institutional comfort of familiar regulatory relationships. Their digital asset product depth remains narrower than crypto-native providers, but for institutions prioritizing regulatory familiarity and consolidated relationship management, the bank desk model offers genuine operational advantages. Post-FTX, the due diligence bar for institutional crypto prime broker selection has been permanently raised. The FTX collapse demonstrated that sophisticated-appearing financial disclosures, prominent auditing relationships, and high-profile investor backing are insufficient proxies for actual financial integrity. Independent verification of key claims is the only appropriate institutional standard. Proof of reserves attestations have become the minimum acceptable standard. A genuine proof of reserves audit uses cryptographic verification of on-chain holdings combined with Merkle tree proofs that demonstrate individual account balances are included in the total. Nominal third-party attestations without cryptographic verification provide limited assurance. The bankruptcy remote structure documentation requirement stems from legal uncertainty about treatment of digital assets held by custodians in bankruptcy. Under U.S. bankruptcy law, assets held by a custodian on behalf of clients should be returned to clients rather than forming part of the bankruptcy estate. Institutions should obtain legal opinions confirming their custody arrangement provides bankruptcy remote protection before committing material assets. The prime broker selection process for institutional digital asset programs should mirror the rigor applied to any material third-party service provider. The decision affects every aspect of the digital asset program for years, spanning investment management, operations, compliance, tax, and legal functions. Requirements definition is the most important step institutions most commonly rush. Without a clear specification of required services, geographic coverage, asset types, and regulatory requirements, the evaluation becomes an unfocused vendor beauty contest. Institutions should invest time defining requirements before engaging vendors, with input from all affected business functions. Operational integration quality is frequently underweighted in prime broker evaluation. The technical integration between the prime broker systems and the institution portfolio management, accounting, and risk systems determines the day-to-day operational burden. Poor integration means manual reconciliation, delayed reporting, and increased operational risk. Benchmarking the total cost of a crypto prime brokerage relationship requires capturing all cost components rather than focusing on headline custody fee rates. Custody fees are the most visible cost but often not the largest. Execution spreads on trading activity and margin interest on leveraged positions can significantly exceed custody fees for active trading programs. For a $100 million digital asset program, execution costs might represent 20 to 40 basis points annually, custody fees 10 to 20 basis points, and technology fees 5 to 10 basis points. Total all-in costs for a moderately active institutional crypto program in the range of 35 to 70 basis points per year are competitive with institutional equity prime brokerage when adjusted for additional operational complexity. The cost comparison between crypto-native prime brokers and traditional bank digital asset desks is not simply a fee schedule comparison. Traditional bank desks may charge lower headline custody fees but provide fewer integrated services, requiring the institution to maintain multiple vendor relationships to fill service gaps. The total cost of the multi-vendor model must be compared against the all-in cost of a comprehensive crypto-native prime broker relationship. Crypto prime brokerage is not a commodity service where all providers are functionally equivalent. The quality of custody infrastructure, depth of credit facilities, strength of regulatory compliance, and quality of operational integration vary significantly across providers, with material consequences for institutional digital asset programs. The selection decision should be treated with the same rigor as selecting a traditional prime broker. Extensive due diligence, competitive procurement process, legal review of all agreements, and a clear evaluation framework that prioritizes institutional requirements over vendor marketing claims. As the digital asset ecosystem continues to mature, the prime brokerage landscape will evolve with it. Institutions that establish strong prime broker relationships during this formative period will have operational advantages that compound as their digital asset programs grow in size and complexity.